Well, hello and good morning, traders. Hope everyone's doing well this morning. And let's get started. We are again gathered here for this post ECB rate statement and looking at the press conference. So we'll be going over this and looking at some of the setups here and see if there's any opportunities we can find. If you have any questions, don't hesitate to just type in the chat box and we'll take the questions as we go. So, all right, so let's get started. So let's fire up our trading view and then see what's really has happened since this rate statement just came out just a few minutes ago. And the results were as expected, 0.75 rate percent hike, and you can see that this is just in line with expectations. So if you take a look at the price action in the euro, notice that there was no real fireworks. And the reason why, it's all priced in. And usually market does a great job at pricing things in. You know, you get these big movements when there is a shock. Certainly there's missed expectation or things are happening that market is not aware of. So then there's where we get a big movement. So this was really priced into it. I mean, if you just take a look at the euro price action going into this, I mean, if you just take a look at the last few days or last couple of weeks, I mean, the euro actually has had a nice little run. Again, the basket was looking pretty weak and has actually gone already running up into it from the last couple of weeks. Again, this is where some of the expectation was also for the 1% rate hike. So that did not happen. Some economists were thinking this could be a 1% rate hike, but not up to that extent. Again, I think we could have seen a much bigger movement off of that if there was a 1% rate hike. So this is all priced in. So where's the next trade? And this is where the press conference comes in very crucial, plays a crucial role. That again is due at 8:45. So we have about 10 more minutes. And again, with these press conferences, it's not about just initial release. As a comments start to roll out, this start with the opening statement. There's a Q&A, and it's always sometimes hard to catch a move off that press conference if it doesn't happen in the first 5 or 10 minutes. I have seen things move like 30, 40 minutes later on. Towards the end of the meeting, they drop a comment, and next thing you know, euro had a big move. So based on what we have right now, it's hard to jump on euro. But it's not really a sell either. I mean, it's just sitting exactly where it was before this news event came out. So we could potentially see a move off of that press conference because, it's not about the rate hike. It's about the forward guidance. And that's one thing that, I've been getting a lot of questions about. The rate hikes happen, but it doesn't result into a big explosive move or a follow through. And again, this is where it's an efficient market theory. It's all priced in. We had Bank of Canada yesterday that raised rates by, again, I think 75 basis points as well. And again, if you take a look at it, this was more all in line with expectation, 2.5 to 3.25. That was a result. And I mean, take a look at the CAD in the last 24 hours. So you can see that CAD did not rally off of that. And this is why can take the rate hikes off the face value. Always go in thinking, is this priced in or not? Is there an information that could actually drive it higher? And again, that's something comes in forward guidance. Bank of Canada yesterday, the forward guidance was still very similar. No surprises there. And again, that's one of the reasons where we did not see the CAD move as much. Now, if you take a look at the Aussie raised rates early this week, and you can see did not result into a higher Aussie. So I think it's the same way euro, I think, has already had a run. So you got to be a little careful here trying to buy the euro because euro is still in this little land here where it might still have more headwinds ahead of it. So you can see that euro USD just sitting right below the parity level. And I know a lot of traders have been watching that level. It kind of flirts back and forth. But again, if you look at it from a grand scheme of things, this is just a number. I mean, if you just take a look at the important thing to kind of watch out for is these moving averages. I think this parity level is not as important at this point because, again, it goes back and forth, go through it. So I think if you just take a look at the moving averages here, for this to get out of this downward momentum, which again, you can see the momentum is very strong. So that's why moving averages does a great job is telling us when the momentum is over. You can see that this still needs to get above the 20 and the 50. That's about 102 before it can actually find a little bit more reason to rally. So now let's talk about possible case scenarios. Euro, if it's strong after that ECB press conference, if they have a stronger guidance, or are they just going to come and say, well, just a one rate hike and we'll see what the data is and we'll go from there. So again, Euro is still behind the curve. They still have a lot of catch up to do among the other major central banks. But again, if the central bank is not as hawkish as the market expects or want it to be, I mean, this is where we could see some sort of a sell-off as well. Because again, we already seen the market run up in the process of this rate hike. So let's do a quick analysis and do a relative strength and weakness check, and then see what's really moving today, so we can get set up accordingly. So one of the things that really stands out the most as you look at the percentage changes is the Swiss franc. Swiss franc is actually the strongest. So this again takes me to Euro Swiss franc, because Euro Swiss franc had a very nice rally the past couple of weeks. The question is, if the euro weakens, is Euro Swiss franc a good short? You can see that Euro Swiss franc actually got above the 20, actually now testing the 50. So it's kind of stuck in between those two. If this needs to fall below 97, I think we could see that this then will fall towards that 96 area. I think it's an interesting point here. This is, again, looking at the rally, we made a nice little higher high, now making a higher low, but at this point, it just kind of stuck in between. So the Euro Swiss franc, and you can see the Swiss franc is stronger than the euro. So I do like the fact Swiss franc is doing well. Again, that's where we need to be. And again, if there's a short-term opportunity, and if the Euro Swiss franc falls, maybe there's an opportunity. There's a good little 2-to-1 risk-reward ratio on this, especially if this breaks below this level. So let's just draw a quick line over here and say, well, this is sitting at about 97.13. Let's just use 97 a round figure. And if it gets below that, I think we can maybe head towards 96. So that's the one pair that I will take a look at. Outside of that, let's continue with our relative strength and weakness analysis. Here we are, Kiwi. I mean, some of these currencies are so choppy that it's very difficult to get behind these moves. When they look a little bit exciting, and next thing it just falls over. I mean, look at Kiwi this morning, picked up a little bit. Let's go on a 15-minute chart. Nice little rally here, and then just falling back down. So Aussie and Kiwi looks the weakest, but Aussie particularly looks the weakest to me. Again, percentage change 0.34%, and then followed by the Kiwi here. Canadian dollar is just hanging right in the middle there. So we know that this is the ranking of this relative strength and weakness. Now, pound is kind of holding steady. I know I had questions about some of the pound dollar crosses. I think pound is taking a pause. I mean, if you take a look at pound yesterday, it caught a bit of a rally, a bit of a movement on the upside there. If you take a look at pound US dollar, I think it's trying to find a little shorter term bottom. I mean, look at the little hammer candle that we got yesterday. So I think pound, I'm keeping a bit more on the sideline here because I'm not sure if there's more movement in the pound, or maybe just consolidating here a little bit. Now we have the euro, which again looks good on the daily chart as a currency basket. So Swiss franc, we already looked at it. And now lastly, the yen and the dollar. So yen, as you can see, after taking a big fall in the past 2 days, took a big fall, and now it's just going sideways a little bit. So it's not in a moment to sell. It's not a moment to rally. If it does break previous lows again, that's when you want to be selling this. We don't want to be holding this when it's just chopping around. So Swiss franc is the one, again, weakening up a little bit, and lastly the dollar. And you can see the dollar is kind of mixed bag this morning. It was looking weak, and then it had a nice little jump over here. We did see some profit taking happening in the dollar yesterday, because you can see that the dollar was doing really well till we hit that midday point yesterday. We just saw a bit of a backing off. So nothing really has changed with the dollar outlook. I think dollar still is a bullish currency. Um, in between, of course, it can have pullbacks. It can have little periods of um, like a little bit more of a sideways to a pullback or going side downwards price action. Again, this is just where a little bit short term profit taking happening. But I think overall, buying the dip in the dollar is still the right play here. Again, now we are hitting that resistance here. I mean, if you go to the daily chart, we're getting some wicks on this area. So yeah, just have to be a little careful here. Maybe in the next couple of weeks, I think we'll probably just stay where we are, go sideways a bit until the FOMC rate statement. Outside of that, I mean, Swiss franc, let's say it's still looking pretty strong. It's actually broken out. As you can see that we actually went sideways for the most part for the summer, and here we are starting off breakouts in the end. We got the breakout in the Swiss franc. In the last couple of candles have been pretty bullish. Again, this is where the right pairings have been in Aussie Swiss franc. You can see the Aussie Swiss franc is now back at the support. If it breaks below, I think I do like it. A lot of consolidation, a lot of choppiness in this area. So this is not the cleanest area to trade. I mean, the best area to trade is when it actually breaks lower and it's not a whole lot to hold it back. Kiwi Swiss franc, it's actually already breaking lower, so that setup looks good. And now we have CAD Swiss franc, which again relatively better, but it's just a lot of choppiness in this area. So let's get back to euro, because I think we want to stick with the euro as we wait for this euro press conference. I think right now euro is holding steady, so I don't really have a strong bias which way I want to play. I think unless there's something more out of this the ECB press conference, any sort of aggressive or hawkishness, I would want to be not going long the euro at this point, because again, the reason why is that Swiss franc is already a better candidate. If I need to go long, I can go long Swiss franc. There's no reason to be going long the euro. But if the euro does pull back, I mean, I think we can take a short pick at euro dollar just above this level. So the question is, okay, where do I draw my support and resistance line? Where do I set up a stop? So the stops can be easily set up right above the highs over here. The tool is really finicky here. We can actually see that, okay, the highs is about 1.0038, about 140, right? So it's sitting at about a dollar or a parity here. Let's just say if you aim for this to break lower, 99.78 area, then again, you're looking for this area to go down. Still very small percentage area for this to move into, but that's I mean that's a setup that I can find within those ranges. But like I said, right now, if I have to just play that relative strength of weakness, a euro Swiss franc is really what stands out on the top of the list here. If it breaks below this level, 97.16. Stop goes right above it, 97.78. So you can see that a little bit wider stop on this. If you can go above that 97.60, that could be it. I mean, this is an area where we can find a decent risk to reward ratio, but not really seeing a great lot of setups that I can short a euro against, because again, CAD looks weak. I mean, look at euro CAD. Euro CAD is rallying. We have euro Aussie. I mean, all these pairs that would take a look at, again, there's better shorts out there. So I think that's the problem. We have a better short and we have a better long. So the euro is kind of right sticking in the middle. It's the same thing as what the dollar is doing. Dollar is holding it there, but it's not really a buy or a sell today. Because, I mean, if you take a look at dollar against Swiss franc, you can see that the dollar is actually moving lower even against the Swiss franc. So it's all about being in the right currency. I mean, you can see that the Swiss franc is now coming back in play, and it's given up that 20 and the 50 moving average. It's been in a nice little uptrend. That uptrend is actually slowly breaking here. So I think maybe Swiss franc has a little bit more legs behind it. Again, following the momentum is the right call here. So we are again, it's 8:47 here, so the things should have started to roll out here. Let's go back to euro. So we are still very undecided which pair to pick. So we are just right in the middle there. Like I said, euro Swiss franc, what I'll look for in the euro short. And if I want to go euro long, I feel then we have a lot more options. I think euro Aussie, looks good over here. I mean, 4-hour chart, it's actually broken out above the 20, the 52 moving average. So nice little turns are happening here. So I can take a look at there. Euro yen. I mean, look at that. We are up right against that resistance. So again, this one setup that I have here is this right here. Multiple times we were tested this resistance here. Again, all the other yen crosses have kind of broken out. This is the only one kind of standing behind. Very little small choppy area here. So I think at this point, this could turn into be a potential buy, but no, don't want to buy just on the initial breakout. I would love to see a breakout and then looking for a follow through. So those are the ones that I'm looking at. If you have any pairs that you are looking at, just go ahead and send it to me. I can take a look at it. Otherwise, it seems like we kind of covered a lot of the main ones. Let's actually see what the equity markets are doing as well. Slight little weakness. Again, yesterday the price action was strong in the markets, so we've seen the rally yesterday, and then we're just seeing a bit of a fizzling out here. But again, we're in the pre-market here. We could see market just opens up, and then if it breaks out above 39 area and reclaims at 4,000 area, I think that could be a positive outcome for the equity markets. But right now, I think it's just sitting in this area where we need to be careful. I mean, it could either pull back and reverse that rally from yesterday, or try to break out. But right now, pre-market, it's not giving us much help. It's down 0.17%, so it's not a great indication which way market's going to go today. So if you're trying to figure out risk on or risk off, which place to be, I think the currency market is telling us a pretty clear picture that the Aussie is weak, the growth currencies are weak, Kiwi is weak, and then even we have a Canadian dollar just hanging in there. I mean, CAD is a tough one. I would say that the CAD is usually very active one way or the other, but then CAD is now just sitting doing nothing. So maybe we'll see if the CAD can actually dip below. Again, if it does dip below, it's below these moving averages. So I think we could see some movement in the CAD. I mean, the CAD I was actually watching is as a failed breakout. I mean, you can see that it did break out and did do nothing. So I do like, if this level gives up, I do like CAD more to the downside. Again, nothing too aggressive, but just falling back within the bottom end of that range. So we got the top end, the bottom end. So I think it's failing to break out, which is not a good sign. I would love to see this pull back towards these moving averages, and I think there could be a good shorter-term trade there as well. And in that case, if we want to take a look at pairing, I think CAD versus Franc then will be ripe for a further breakdown below these moving averages. Again, a lot of choppiness. In a lot of these Swiss franc crosses, there has been a lot of choppiness. So if they are clearing out, I think there could be a lot more further move to the downside, just like what we were seeing in the Aussie Swiss franc or the Kiwi Swiss franc. All right, so far there's nothing out of the euro that is making us jump out of our seat. So again, this could be a dud. Maybe there's nothing out of it. So there's no reason to sell or no reason to buy. And that's why I say a lot of times proceeding for these events, the big move happens already. And if the euro was sitting right at the bottom, I think there could have been a much better opportunity because market has to then price in new information. But lately what we've seen is that the central banks came ahead of time, start to hint the rate hike, or if they're changing their stance, and the market price in ahead of time. So when these rate hikes are happening, it's not a big surprise. I mean, we saw the same thing with Swiss franc. Swiss franc was a surprise. Remember, that was a big surprise, and that really caused a big move because nobody was expecting the Swiss franc to raise rates after years and years. So that's when big move happened. But outside of that, the Fed can come out and raise rates. Guess what? The dollar's already strong. So it's not a whole lot of reason for a big movement to happen off the rate hike. But if there's a forward guidance is strong, what it does is that then it just keeps the currency stronger. It just doesn't make it fall. If the guidance is weak, then we can see initial run up, and then we see a selling on the news. If you take a look at the Aussie, if you look at the chart, you won't even know that we had a rate hike this week. But again, there's just no big changes. Rate hike and everything was already priced in. I mean, Aussie has relatively held in much better. You can see. I mean, in considering current market conditions, Aussie's actually held in much better. But you can see that there's not a whole lot of surprises or movements. Another pair that I was actually watching that I want to have another question about here is Aussie Kiwi. So Aussie Kiwi is an interesting one. Remember, like, this is the one that I've been watching since last year, because I mean, look at that divergence. I mean, it's a pretty clear when Aussie's been winning over the Kiwi. But I mean, look at that. We got a breakout. We didn't really touch that 113 level as a resistance, but we're slowly breaking lower. I mean, the line in the sand over here is that if it gives up this 20 and 50 moving average, we got a breakout. It failed, and now we actually back in the lower end of the range, which means that it opens up the door for this to go towards that 110, because now the 111 to 110 is a bit of a range, very small range. But seems like there's a bit of a change happening. I mean, hourly chart, Aussie's actually weakening. 4-hour chart, Aussie's actually weakening. So just want to point that out. That seems like Aussie is taking a lead here in weakness. I mean, even today, Kiwi is down 0.22%, but Aussie is down 0.34%. So there's a bit of a relative weakness that we can see in Aussie compared to the Kiwi, which again makes a good short for Aussie Swiss franc. Like I said, it's broken very nicely here. I mean, 3 months of consolidation, almost July. I mean, not much June. Okay, July and August, 2 months of consolidation, and it's just breaking lower. So this definitely have more further downside risk if this continues further. As you can see, there's a very nice little support area right around here, right here. I think this is what you really had to watch out for. If this can clear out this little zone over here, I mean, there's a lot more of the downside risk. It's in the Aussie Swiss franc pairs. All right, let's go back to the euro. If not much happening here, we'll just pack it in and not really trying to push a button when we shouldn't. So here we are. Euros. It's strengthening a little bit post this press conference here. Seems like so far it's catching a little bit of a bit here. So we got a little on a shorter term chart, on a 5-minute chart, right around here. We got a nice little 5-minute candle. We got a nice little up candle here. So like I said, I'm not really interested in buying euro today. Again, because Swiss franc is a better long. But if the euro is actually start to take over the Swiss franc, so keep an eye on euro Swiss franc. Now that's when I'll be more excited, because now I have euro that's outperforming the Swiss franc. But right now, our euro is not outperforming Swiss franc, which means that I'm not really looking for a long, even though the euro is strengthening up a little bit. I think the momentum is really in the Swiss franc. So, but if you're looking for euro pairs, I think euro Aussie or euro Kiwi would look decent here. It's all about the holding period. Today's a Thursday, so if you want to hold something from today till tomorrow, I think we can stick between an hour to a 4-hour chart. But again, not wanting to go too much longer term, just follow that momentum, follow the moving averages. I mean, right now it looks like it's just gaining in nicely here, so maybe there's a little opportunity there. But like I said, the other one, if you want to go back, I mean, euro yen seems like it's wanted to get a breakout here. So I think out of all, euro yen could be the one that could have a little further breakout, because it's again hitting a very key resistance from back in June. Even if you want to take a look at it, I mean, I know we looked at CAD as well. I mean, I don't mind taking a look at CAD as well, especially if it breaks above this choppy area. Again, this is the one that really hasn't moved, but if the CAD can fall back further within the range, I mean, there could be a shorter term trade on this as well. All right. Seems like we covered everything here. Not a whole lot. Like I said, I'm not too excited to jump on euro here. And this price action Swiss franc is really strong. So we'll wait till the market open and see how things go. I mean, right now the markets start to look a little bit weak. I mean, look at the price action here in the S&P. They're looking weak a little bit. And if the market stays weak, I think euro Swiss franc, Aussie Swiss franc, or Aussie dollar, I think still like a decent play here. I mean, a lot of choppiness, as you can see. It's not a clear area that you just have to give your trade a little bit more wiggle room and expect some chop to happen here. I think that's really what we are seeing here in some of these crosses. That looks pretty simple, or it looks clear that it's going lower, but just going lower in a very small, choppy fashion. I mean, look at the Aussie dollar. We've got nice little, a couple of wicks on this 4-hour candle, but still below the 20 to 50, which means that it still looks like a better short than it's a long. All right, we'll wrap things up here. If you have any questions later on, just don't hesitate to send me an email. Otherwise, have a great rest of the day, and then let's just wait for the market open to give us a little bit more clarity on what day is in store for us. Thanks, everyone. Cheers.